Thank you.
Are you throwing in the towel? I mean, is this basically my lifeblood is no longer going to work in an ESG world, and off we go? I mean, or is this just an opportunistic way to defensively make sure that this kind of disinvestment doesn't hurt you guys in the future?
Yeah, Kelly, it's a good question. I think the world's looking for lower carbon transportation, and we're trying to feed that with this creation of Merge, which, as you mentioned, helps electrify fleets. Oil's going to be around for a very long time, decades. And so we'd like to sort of be at the intersection of that, pun intended. And so, we think oil's a great place to be. We think electric vehicles and electrification is a great place to be. And so we're trying to have our foot in both worlds. And
I want to ask one more question about this, but it's basically to get at this concept of if you're an energy investor, is it like tobacco, when after the 90s, after these mega settlements, companies like Altria still were pretty good investments for the few that were involved? I mean, can it still do well, or do you think it really might not do well because it's just not going to enjoy fund flows for the foreseeable future?
Well, I think traditional energy is clearly out of favor, but the cash flows are coming up. You mentioned oil's $65 a barrel. Companies are making a lot of money. Exxon and Chevron had good quarters. The stocks are the best performing this year. So I think as the cash flows come back, so will the investors. And so I think traditional energy is going to be a fine place to make money. Harder over the next 20 years, but cyclically looks pretty good over the next 2, 3, 4, 5, 6 quarters.
Yeah, and it kind of gets at this issue of as Warren Buffett put it over weekend, kind of the moral judgments that we're making about these companies when he's saying, it's not just which ones do fossil fuels and which don't, but ESG starts to get into every aspect of behavior. In fact, let's take a quick listen to how he described Chevron and some of the other investments right now.
I think Chevron's benefited society in all kinds of ways, and I think it continues to do so. And I think we're going to need a lot of hydrocarbons for a long time, and we'll be very glad we've got them. But I do think that the world's moving away from them, too, and that could change. I don't like making the moral judgments on stocks in terms of actually running the businesses.
Yeah, so there you have it from the Oracle himself. So, Dan, let's talk about what you're launching here and how it's going to work and how lucrative do you expect it to be?
We think this is a big market, Kelly. When you think about the fleet vehicle market, there's 13 million fleet vehicles out there. We sell 3.5 million a year. So it's a very big market, and it's going to electrify. So the question is, how do you take a complex process going from a gasoline fleet to an electric fleet? How do you make that easy? And so our job at Merge is to do things like help select the right vehicles, figure out where the chargers go, what kind of chargers you need. How do you get the electric off of the grid and into the right spots to charge those vehicles? How do you monitor the vehicles? So that's the process we're going to bring to the equation, and obviously we think it's going to be a big market over time.
Do we know for sure that electric vehicles are better for the environment if we take into account the whole production chain, the supply chain, the charging stations? I mean, that whole infrastructure?
I think in aggregate it clearly is, and certainly if you're buying a vehicle, there's no question that an electric vehicle, depending on how it's powered, but it's anywhere from 50 to 100% lower CO2 and particulates. So it's definitely better once you've bought that vehicle. The pieces that go into it, upstream, I think electric vehicles certainly have some manufacturing components that are carbon intensive, but net, I think the electric vehicle is clearly a better CO2 or climate choice.
So last question, what other kinds of investments might we expect you to make going forward? If your traditional investor comes to you because you have such depth on, the energy plays and the big oil firms, I mean, what should they expect now?
Yeah, I think you're going to see us do a couple things. One, we're thinking about places that folks aren't focused. So if you look at an energy transition play, continues to be copper, right? Copper is in everything associated with the transition, windmills, batteries, EVs, et cetera. So we like copper and metals as a play. I think we're also going to look very closely, not necessarily at the EVs themselves, but the infrastructure around it. To us, that's the underserved market. We may be a little overcapitalized on EVs. We're undercapitalized on services.
Yeah, the picks and shovels for the gold rush kind of thing.
Exactly.
Dan, thanks so much. It's good to check in with you. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.